Where is the bottom, everybody? Home prices hitting new post-crisis lows, according to the latest Shiller report, falling 0.8% in February from January, down 3.5% from a year ago. Bob Shiller is co-author of the Shiller Index, author of Finance and the Good Society. He's an economist, a professor at Yale. It's good to see you, Bob. As always, how much further can home prices possibly fall?
You want me the worst scenario you're asking for?
Yes,
I don't
absolutely.
like to be a doomsayer. You're asking for the worst.
Yes.
I don't think they'll fall more than another 25%. I bet on that.
Bob,
I think they could fall further. Not that much probably, but because there's a readjustments in our thinking. Our long-run opinions about real estate seem to be changing.
In what way, Bob? How are they changing? Is that causing this further price decline that we're seeing?
See, people are reassessing the general idea that I have to have a big house out in the suburbs, that I'll drive to every day. Gas prices are higher. We've gotten kind of a different feeling about big houses. Do you really want a big house? Small is beautiful, might be coming back. People like urban environments, the cities where it's more natural to rent. You could buy a condo too, but rental has its advantages, and people are realizing that when they see all these people in these underwater investments in houses.
Well, in some ways, the value of owning a home is based on, in part, or should be, it wasn't during the bubble, how much you could rent it out for, and really what the incomes are in that area. And in terms of the valuation of homes today and how reasonably priced they are we back to normal, or are we even cheaper than historical norms?
The interesting thing is that real inflation-corrected rents never did much of anything over this whole boom. So there was never any real change in the demand for housing as interpreted by what people will pay to rent a place. But we had a big bubble, and yeah, we're back. I mean, it's margin of error. We're kind of back to where we have been for a long time on price to rent. The problem is we could overshoot. And that could happen. We have a big supply of housing after all this building, and it's weighing on us now. And it may take a long time to come before we'll actually see substantial price increases.
Is that really what's causing? It's shocking to look at, say, Las Vegas and Atlanta and still see those markets continuing to fall as they have. Is that really what's at play in those two markets in particular? Is the excess supply of homes?
Well, that's a factor. Atlanta has not done well generally. The Atlanta economy kind of, in terms of income growth, kind of resembles the Detroit economy. So it just hasn't discovered, it has to rediscover itself. But, that's regional.
Right.
I think in the longer run, housing prices might kind of track construction costs. And in the longer run, there's no real reason to think that there will be a new boom like the one we just saw.
Not in our lifetime, not for sure. If you look if you look at all the different factors, Bob, what is the most critical, you think, to any sort of recovery in prices at this point? Is it the unemployment rate? Is it mortgage rates? What is it?
Well, part of the issue is that the federal government still has Fannie Mae and Freddie Mac under conservatorship. The government is guaranteeing, almost all of our mortgages, but we don't know where this is going and how much longer the government's going to do that with a huge debt problem. So that we have to resolve that. And if that were resolved in some way that encouraged home ownership, that would be a plus. We're talking about scaling back the mortgage interest deduction, too, as a way of solving the deficit. These things are all weighing on the market right now. If any of these cleared up, it would look better for the housing market.
Bob, great to see you. Robert Shiller, as always, of Shiller of Yale, author as well. Bob, we'll see you soon. Take care.
Nice talking to you, Dagan.